At the MoneyShow Toronto, we're with David Wysocki, Managing Director at Harvest Portfolios, and he's here to talk about out-of-the-box investment strategies. David, thank you for your time.
Very nice to see you.
So today, the Times today call for out-of-the-box thinking and non-traditional investing. What do you mean by that?
Correct. We find ourselves in an interesting time in that interest rates are near zero. We have this generational shift towards investors who are now looking for income and who need income in retirement. And we find that traditional asset classes and traditional way of investing, the way they were investing as they were accumulating assets, it's just not necessarily the best way of investing as they're entering retirement. So we're looking for non-traditional ways of generating income as investors enter the retirement stage and the retirement phase of their life.
Okay. For example, what are those non-traditional ways?
So one of the best ways, and one of the ways that Harvest has separated itself from the horde of ETF providers out there, is covered call strategies. We view covered call strategies as a way of generating additional income flow and supplementing what investors might be doing on the equity side in order to generate income flow through their retirement. They are great strategies to supplement what clients have typically done in investing in broad markets, using passive ETFs. Now they can shift towards covered call strategies that allow them to monetize volatility and monetize some of the market fluctuations that are not necessarily positive for them as they're drawing capital out.
Do you think your message is also to investors to look beyond headlines and not get bogged down by the trade tariff war or the Brexit deal and focus on long-term growth and picking companies that bring that growth?
Definitely. You have to look behind the headlines. Every year we talk about market volatility, and whether it's Brexit, the debt crisis, there is always a reason why investors should be selling out of their equity positions. Every year there is a headline that comes across, and every year we can rationalize why we shouldn't be invested. At Harvest, we believe that investing in quality equities and then monetizing short-term volatility through the use of covered calls is really the best way for investors to ensure that they have enough capital to make it last through retirement.
Okay, wonderful. Take us through the Harvest Portfolio Group and some of your one-of-a-kind ETF products.
Definitely. So at Harvest we have 9 covered call strategies that range anywhere from sector-specific low volatility areas such as utilities and global real estate to broad market themes such as brands. All of our strategies really focus on quality businesses that have seen multiple markets, that have been through multiple recessions and that have come out at the other end thriving. We look for companies that generate an above average level of free cash flow, that have a history of growing their dividends, that are currently trading at a discount in order to ensure investors are entering this space not in overblown areas where they might be exposed to downside risk, but rather entering equity positions at reasonable valuations, but entering businesses that have been around through multiple cycles. And we enhance that further with a covered call strategy that tends to lower the volatility relative to a long-only position, but more importantly for retirees, they generate an income flow. And when I say income flow, anywhere from 5.5% up to 9% that's paid out to investors on a monthly basis.
Excellent insights there. Thank you for introducing us to the Harvest Portfolio. Thank you so much.
Thank you so much. Thank you for your time.